we can move it over and we'll have a look at gold. In fact, this is gold on the raw chart. I'll bring you out to all my technicals as well, just so you can see exactly what is happening right now. So gold overall, gold is at quite a major, it's at a big decision point today. Now, a couple of reasons for that. Now, first off, just to set the scene, we have an open position on gold at the moment, which we've had since last week's FOMC statement at $1,212 per ounce. We've taken some partial profits over the course of this week. Overall, the overall trade has been moved to a position where it's a risk-free position now. We want to give this some room to see if it can go on for a full-on breakout above this major overhead level of resistance. You can see here very clearly a V-shaped reversal pattern is in development. The 200-day moving average is not too far away. We're not too far away from the February highs here as well. So a few points to note right now in respect to gold, and you can see it's chopping about at the moment. We've broken again over the last weekly highs and also the daily highs today. In fact, where we're poised at the moment with a recent surge we've just seen is the highest level since the end of February here. So we are starting to get very close to potentially taking out that previous high. Now we are coming up to a major overhead level of resistance. So if you go back on your chart, for everybody who trades gold, go back and have a look at the resistance point from Brexit. I'm sure you've already got this on your chart. If not, it's worth adding on. So this overhead trend channel, which takes into account the swing highs, also the high that we've reached over the course of the US elections, and of course the more recent swing high as well. This is where gold is battling at the moment. This is battleground today. Reason I say that is because if gold can close above this trend channel today, and if we can get a higher close than yesterday, that would bode well for additional momentum as we go into next week. And of course, we've also got Article 50 being triggered next week as well, which could certainly cause some volatility. And we all know Brexit, what happened on Brexit, 1,000-point move on gold in one day off the back of Brexit. But we want to see whether gold is going to get additional inflows now between now and Article 50. And as such, we are keeping our open position running right now, but we're also flexible to close this in the possibility that this is it for the move at the moment. We're definitely at a decision point right now. If gold can hold above this level, ideally a higher close than yesterday would be better. We've already got a higher high and a higher low, but I'd like to see a higher close in order to hold this gold position right now. If it holds and we can see a high close today, essentially higher than the previous day's closes. Since the FOMC statement, we've got higher closes every single day here. So you can see here we've got 5 days of consecutive higher closes. It's been a very good move. We've seen a 500-point rally to the upside for gold since the FOMC statement. And in fact, if you go down to the lows prior to that, it's actually been more than that. It's about a $60 move for gold, or 600-point move. And that's really good going for gold, considering it had a 50% retracement just prior to that statement. So what else do we need to look at to give us clues here as to whether gold is going to catch fire and break above the previous day, the previous swing high here? By the way, if we do that, I could really see additional momentum to the upside here for gold. We could really start to see a lot of buy orders get filled, especially for a break above that previous swing high, the 200 MA as well. We could, especially a close above the 200-day moving average. That is where gold will really start to gain momentum to the upside.